Hi there, welcome to the Alpha Wave Trader Market Update. I'm going to focus on the S&P again today because I think it is pretty much the most exciting market to be watching. Obviously it is the most important for us in Australia, but just the price action over the last few months has set up a situation that's fairly rare, and I think it's just interesting for us to watch this play out and to see what all of the key support and resistance zones are, and so you can sort of build up a picture of how I sort of look at things, and yeah, it's quite interesting after this rally we had last week. If you watched last week's update, you'll remember I said you can't be selling it, you have to go with the short-term momentum, but the short-term momentum is heading up into an area where there should be very stiff overhead resistance, and after the rally in the last couple of days, the market really is starting to get stretched to the upside, and the resistance levels are starting to come into play. So it's getting very interesting from here. Looking at the quarterly chart that we have here of the E-mini S&P 500, you'll remember I've shown you the sell pivots over the last 20 years and how they play out. There's only been 4, and now we've had a 5th come into play here. 2 of those ended up in the crash, and we had a false signal here which turned around into the buy pivot straight away, and market rallying massively to the upside. And then we had another sell pivot here in 2015, which saw a rally back into the guts of that sell pivot candle, then selling off again to retest the low of that candle. So that was 6 months of weakness there, retesting the low of the sell pivot candle and then bouncing, creating the buy pivot there, and another leg to the upside. So here we are now with the sell pivot in place, and a very big one at that. Really sharp move, which has actually seen a close which is on or below that 10-quarter moving average, which is obviously nearly 3 years of data for that moving average there. You can see in the trends that we've seen that once it has failed below that longer term moving average, you've often got those huge moves failing below it there, the crash, a bit of work done around the moving average in this period, and then holding above it all the way through from pretty much from 2011. We haven't really failed below that longer term moving average, so we've got the signs of a hint of weakness, and now we're rallying up into resistance. And resistance for me is based on a number of factors. We have the actual sell pivot candle and the resistance zones around that, the midpoint, and then I have the sell zone of that candle and the buy zone, and that's based on the 75 to 87.5% retracement, and that is conversely the 12.5 to 25. And you can also use those levels for the actual waves that you see. And looking at it from that point of view, we have this massive wave up from 2016, and the sell zone of that coming in around 2665 up to 2800. So that's a very key area, this 2650 odd to 2800, really important. And also I'm looking at the the whole wave up from the crash, and that sell zone around 2400 to that sort of 2660, and obviously that's very big picture, so that will come into play eventually, but in the short term, something you're keeping an eye on in the background. But just looking at the actual sell pivot and where the resistance is going to come in, it's going to be around this midpoint or up in that sell zone, and we are now, shooting up above that point and heading up towards this really key area. It's up above 2800 where I'll get really excited, but I'll show you on the short-term charts that we're at a point where we can definitely see some selling come out of the woodwork now. So I'll just switch over to the weekly chart for you. So looking at this weekly chart, we have this distribution that's taken shape here after the reaction from this really strong rally. We've had the reaction, and now all of this price action is related to that pullback. I've shown you the sort of buy and sell zones within that range, where we keep finding support and resistance over and over again, and we've got the point of control of that range around 2700, which is a very key zone, and the market after last week's very big rally, approaching that 2700 point of control, which is really important. We have the this sell zone which it's starting to enter into. So if we just focus on the downtrend from the high and how this can play out, basically until it heads back above this 2950 high in the S&P, I am maintaining this is going to see lower prices, especially now that we have really broken that previous wave low within the uptrend. So as we have the uptrend developing and we've broken out to new highs there, once we take out the previous highest low within the wave, that's a hint that things can be turning down, and you don't want to be selling it then, because you can see if you were a seller at that point, you may have had a really sharp move to the downside, but it's found buying support, and all of a sudden you're well out of the money. And this is what is helping this rally head higher, is a lot of shorts being squeezed out of positions. So what you want to do once you've seen that break below that previous wave low is to wait for the market to head up into the sell zone of the current down waves. And if we just look at the way that this is progressing, this second major wave down, so this wave from this high all the way to that low, if the downtrend is going to be maintained, it shouldn't really head above that high. So if it's going to be weak, we should see stiff resistance coming in around this zone. So even in the short term, we could head up into this area. Should find some selling pressure, and even if we are going to head up into the key zone, which is the sort of sell zone of this whole wave down, which is where you just, as a trader, you really do want to be looking for opportunities to get short. In the meantime, it can still have a sizable sell-off from this area, and the spot where you're looking, and this is what I've got over here, is just of this wave down. The sell zone of that wave down, it comes in at 26.94 to 27.60, and the S&P closed at 26.77 on Friday. So it's really just below this really key area of resistance, which is also within that major area of resistance, the sell zone of the whole wave up from 2016. So just so much technical indicators saying that this market is getting overbought and heading into an area where it should see a reaction in the very least. And the midpoint of this down wave here is the point where it should have a good chance of getting back to, at the very least, before deciding whether it wants to take off to the upside again or collapse. And really the risk is that if the selling comes out of the woodwork up in this area, there's a lot of people waiting to hit the sell button and just allowing this momentum to the upside to play out. But there will be big players just waiting to jump on this if momentum shifts back to the downside. So the risk is if we fail and start heading down, people will be looking at this big picture and knowing that if it breaks back below those lows, it really is pretty disastrous. So you could expect to see some pretty sharp selling coming out of the woodwork if we do turn back down from this area. And a target back to the midpoint of this current down wave would be the area where you'd say there's the highest probability of the market coming back to, and that's down at around 2570 odd. So looking from a strategy perspective, and this is not advice at all, this is just looking at, giving you some ideas of how to look at these things, is you could look at put options as volatility falls rapidly as the market rallies. Options are starting to become good value again, and if this market can open the week and sort of squeeze up into this area above 2700, buying a few of that strike, which is around that 2570, with sort of a fairly short term, even March or whatever, just as a play, looking at the possibility that there should be selling pressure up in this zone, and once it gets back to that midpoint, if it can have a selling reaction from this zone, you could buy calls against the puts you have to create a straddle so that you can make money whether the market rallies or falls from that point, because it's not saying yet that we're definitely going to head back down in a huge way yet. It's still maybe a few months of thrashing around before really bucketing again, but good chance that you'd see fairly good selling pressure at least back to that point, and if we're going higher, it should find good support from there. And so buying puts with that strike pretty cheap, and then let's say you buy I don't know, 2 or 4 of them or whatever, and then you could buy half as many calls against that, so that let's say you're long one and short one from that point. And so if the market does blast higher, or terribly, if it really does turn back down from there, you're exposed, and you can do it in a fairly cheap way where you're not too exposed by using the options, because the momentum is still up, and so you're either just doing that if we do spike up into this zone, and also I'd be waiting for that momentum shift in the market from this area. So finding that daily sell pivot from this zone, failing back below the low of the highest candle, would be the first sign of a momentum shift. And you could wait for that before acting to buy any puts or whatever. But it's definitely an interesting time as this market heads up into this zone, and I think it's definitely not the time to be jumping in and buying this market, I don't think. And having said that of what the key areas are right here, this area is still that real holy grail for me of the spot where I'd love this market to get to. And if it can shoot straight up there, well, I mean, that's I would be just looking to act in that area. I just don't know that it's going to go there in a straight line. But an interesting time now with the quarterly sell pivot in place and the market now getting overstretched in the short term to the upside into very stiff resistance. It should be a pretty interesting ride from here, I think, and traders should be on alert for what they want to do up in this zone. All right, that's it. We'll come back and see how it plays out next week.